Is it a recession or not? It depends on who you ask. You came here for the truth, so let me unveil that for you. In today's video, we are going to look at the white-collar recession that is going on right now. I'm going to show you what's happening with the jobs. I've got a lot of data to bring to you today, and I want to get into it right away. Let's begin here. Welcome to the white-collar recession. And you will look around and you ask the question of, what is current unemployment rate the government gives you, their U3 unemployment rate, which at the time of this recording, it jumped up to 3.9%. What is important about 3.9% is that historically, when it goes above 4%, there is an official recession at some point in the near future. If they can hold it down under this number, magically, there may not be an official recession declared. But history shows when it goes above 4%, it usually climbs above. We're in a recession period for a while, and then we see what happens. You are looking at, of course, a very different world than, over this last several years, in fact, where we have been consumed by debt and everybody is drowning in a sea of inflation. Here you have it. Over the past year or so, pretty much everyone who has looked for a job has told me the same thing. The job market is brutal now. They've applied to dozens, if not hundreds of openings, only to get one or two callbacks. No one's hiring, they tell me. I've never seen it this bad. Listening to them, you would think you're in the middle of a recession, but the confusing thing is that we're nowhere close to one. Unemployment is near a 5-decade low. The economy is adding hundreds of thousands of jobs each month, and wages are growing faster than inflation by all standard measures, the manipulated measures. The job market is doing just fine. So why am I hearing this? Well, it just basically gets into the fact that people who are making more than $96,000, well, the situation is pretty depressing. Hiring has slowed to a dismal 0.5%, less than half the peak it reached in mid-2022, and then it goes on. So if you make a six-figure salary, it's a bad time to be looking for a job. All right, now, that's when you start to understand what has happened. Many people are dealing with this today. And they're in the same situation as just about everyone else because they're pushed to the edge. It doesn't matter where your income lies. It's all based on expenses, and everything has become much more expensive. So you could have afforded your home before. You could have afforded the car, the insurance, HOA fees, whatever, like wherever you are, there's all these things that you're buying. And okay, that's, this fee and that fee and this insurance, that insurance. It has really multiplied over the last while. And people at every level are hurting, of course, except the very top. And so now what's going on is that people are pulling back on expenses. There's an issue with corporations. As Mark Zuckerberg suggested, managers managing the people who are doing the work. That's who is getting cut today or is in the biggest, I would say, the worst position. And of course, with artificial intelligence, I think that the middle management specifically, is in a very bad place. They could get pushed out. Like a lot of companies will say, hey, don't worry, you're not going to get fired. But remember that job you were doing like 3 years ago? Yeah, okay. You want that job again or you want no job? Take your pick. So that's what's going on today. And of course, it's a little demoralizing people. They suddenly were promoted. Maybe they went from a supervisor, then suddenly they're a manager. Wow, fantastic. You've worked so hard, you've stayed late and all this. And then they're saying, hey, we're going to get rid of management. And so that hurts for a lot of people. They can move to different companies maybe, but I see it as a long-term trend. Okay. And so that's what's happening. It is affecting people up in the higher incomes. I don't want to say high incomes, but higher incomes. They talk about a lot of different things. There's the big stay, trapped in place You've heard of the Great Resignation, also the Vibe Session, like all these different names. Okay, so what's going on now today is that people are essentially dealing with higher expenses. The job market, yeah, there's a lot of people employed in a sense, but people are working two jobs, they're working three jobs, they're working side hustles in a world in which 2019, so many people weren't doing that. We move forward a few years, everything seems to be different. Right. What has changed? Since 2020, of course, they've been pumping out the cash. They've been doing so, creating the inflation that everybody's experiencing now. Let's look at some data. You can see the US labor market downshifts. Job growth and hourly earnings moderate while unemployment rate rises to 3.9%. These job numbers are very skewed, just like any of the other data. But even with that, not as strong as we've been told all along. US consumer confidence sours. This is going on because of all of which they've been dealing with. Their credit cards are maxed out. The student loans are, a heavy burden on a lot of people, paying on average about $400. Okay, $400. That takes a big chunk. At the same time, and by the way, senior citizens have student debt. There's a lot of them. All right. And then, of course, other forms of debt just continue to add on. This is the US Services Index contracting as business activity gauge falls. On a global scale, the growth is expected to be, in that 3% range. But when you start to zoom in, some economies do not appear to have any growth upcoming. It's just not going to happen. Too much inflation, growth just isn't there. We need a lot of growth and lower inflation in order to, maintain this balance, which clearly is not the case. If you look at the Eurozone, I could tell you right now, you look at the Euro area in general over the last little while, technically it's gotten out of a recession, but you break it down by country and look at that. Spain easily has been growing over the last year and more. But other countries haven't really fared as well, okay? Especially when we look at Germany, which was considered to be, so fantastic. And now, not the case, because you can't grow forever, especially in this environment which Europe is dealing with, demographics problems. Just name it. Just name it. Now, does that mean that I don't want to do business in Europe? I still want to do business in Europe. There's no question about that. But I'm not going to be, I got to be honest about it. All right. I got to say, okay, well, I got all these other markets here that I can touch on as well. But I'm certainly going to open up my arms to the European market because millions upon millions of people there, customers are there. And of course, we want to do business there. But, look at the long-term trends. Okay. Let's be clear about that. So when you're investing in companies, keep in mind what companies are the ones that are doing very well. You look at Europe, you got the weight loss drugs, which are carrying, like if I say invest in Europe right now, what are we talking about? A couple weight loss drug companies and, one designer company doing real well right now. That's not strong. Okay. That is not strong at all. And what do we have? What's the focus right now is everything to do with the Federal Reserve. And what had they suggested that made everyone so happy? And then the stock market seemed to do well afterwards. That is Jerome Powell, the FOMC. They said we will, it'll be very unlikely to see rate hikes. Rate cuts are coming, just not yet. And in addition to that, they slowed down their quantitative tightening policy and they made it clear that they want to go away from the tightening. All right, that's important. But then you look north of the border in cold Canada, the Bank of Canada can diverge from Fed on rates without stoking inflation, according to National Bank. Worry that weaker loonie means inflation in imported goods. Absolutely. And so what's going on here is that Canada is intending on cutting interest rates. This is Tiff, good buddy Tiff. He's the equivalent of Jerome Powell in Canada. And he said we're not quite there yet. We've made a lot of progress on inflation. All we have to do is exclude, I love it. I love it when they say this, volatile food and energy. What about the housing market? What about that housing market though that has multiplied in the past few years? What about that, Tiff? Okay, so inflation is not going high. Okay, don't worry. Just exclude those couple things. Inflation's going in the right direction. Good stuff. They're going to cut interest rates. That anticipation of them cutting, people start front running that. And of course, there's an issue that we are going to get more inflation. There's no question about it. And we will see that, as they say here, weaker loonie. The Canadian currency starts to weaken. And remember this, wherever you are around the world, if the US is going to leave their currency up here, that means everybody else goes down. That means it's more expensive to buy US or anything, in fact, because everything's priced in US dollars. This creates an imbalance. Keep that in mind if you're an investor or if you're just somebody wanting to pay attention to what's going on right here and now. This is key information you stayed into this part of the video, and of course you doing that gets you the good stuff. I always like to put the best, if I can, right near the end to reward those with patience. This is an interesting one. The share of prime working age US men with a job has declined from about 96% in 1950s to 86%. The effects of recessions, globalization, and disabilities can partially explain the decline, but there are also several other reasons why men aren't working like they used to. They get into that here. I think that what we're seeing now is many people are just saying, I've had enough of this. I don't want to work. I'm disenfranchised. I don't like this. I don't like that. They're not doing it. That is a problem for the economy. We have people that are staying in the workforce longer than they would before because inflation has picked up. The labor force participation rate needs to improve. They need to improve that. But what's going on instead, what we're seeing here is people getting 2 and 3 jobs. They're taking the side hustles. Everybody's got a side hustle today because of the obvious price increases, the inflationary factors that have been put in place by the central banks. They did this on purpose to create a divide in between the rich and the poor. What can you do? Obviously, there are steps that you can take. I've got my financial education free financial education course. And unlike anybody, nobody's doing anything like this, but anybody who does that, what do? Oh, they want your email because then they upsell you at the end. There's no upsell. You go through that. It's 20 minutes of pure financial education. And I didn't link to my YouTube at all so that you could share it with your family and friends so that they can get information and not be like, hey, I didn't talk about the Fed. I didn't talk about central banks at all. None of that stuff. So it's just pure financial education. And yeah, it's totally free. No email, no paywall, no nothing. TheMoneyGPS.com. All you got to do is click on that link that says compass, and you're right there. You're watching. I hope that you will do so. TheMoneyGPS.com. Check it out. And as always, all I ask for is a thumbs up on the video to support the channel. I'll see you tomorrow. Take care.